Hey everybody, hope you're all doing good. In today's video, we're going to be discussing liquidity. Okay, this is pretty much the single-handedly most important concept in my three-step distribution model. With no liquidity, there is no three-step distribution model. Okay, everything stems from liquidity. All of your distributions, liquidity. Okay, and you're understanding your manipulations using this liquidity. Right? So the whole point of this video is that I'm going to be breaking down the easiest ways to understand what liquidity is in the highest probability areas of liquidity in the market that you can use. Okay, because the misunderstanding is that liquidity is simply just at highs and lows, and that at every high and low that you sweep out, there is going to be it's a high probability sweep, when in reality that is simply not true. So I'm making this video to clarify what the highest probability levels are of liquidity are in the simplest ways you can use them. Okay. So, also, I really wanted to say thank you guys for 10K followers on TikTok. If you haven't followed me on TikTok yet, that'd be great. But yeah, I hit 10K, so thank you guys a lot. It's a pretty crazy milestone. I only started the account 4 months ago, so I hope the content that I post on YouTube and on TikTok is beneficial and all that stuff. And also, I'm running a discount code for the premium upgrade throughout this weekend. So if you're seeing this video on the weekend of the 18th for Sunday, for Easter Sunday, I'm gonna run a discount code for the premium upgrade for 10K. So thank you guys so much for that. Now, anyways, let's hop back into what we're talking about in this video, which is understanding liquidity. Okay, so as I mentioned before, liquidity isn't just a sweep of a high time frame high or low, right? Because how can you potentially or even understand a break of structure versus a liquidity sweep? You can't. Okay, if they're both breaking above the high, sure, maybe you could say, well, a wick isn't a break if we wick out a high, da 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 da. It's super hard to differentiate a sweep of a low and what's a high probability manipulation versus what is a break in structure or what is an irrelevant move in the market that has no relevance to your trading at all. Okay, so the simple thing that I'm going to tell you right off the bat is that we have to filter out this liquidity based on time frames. Okay, if we are on our low time frame, every single thing in the world looks like a liquidity sweep or a break of structure. We cannot sit on the low time frame, so we have to have narrative. Right? And that's why I've made videos on understanding bias and how to find your high time frame bias and how to understand when your manipulations are occurring. Okay, so you guys can go check those out for more in-depth explanations. But I'm making this video to explain that all of these pivot highs and lows in the market are irrelevant, right? If we look here, look at this trade I took for shorts. Why was this the high? Why was this liquidity sweep relevant and none of the sweeps here were, or this sweep here? Literally both sides swept out low time frame liquidity. Why was this the trade that I would have gone, or I would have taken out buy side and gone short from this liquidity sweep, but I wouldn't have gone long? Okay, and it's not just the confirmations, right? It's not just the confirmations and the shifts in structure. I know we didn't shift structure higher, but it comes down to a high time frame narrative, right? I preach this in pretty much every single video. You have to have high time frame narrative. Okay, so in this example, even you can see that buy side liquidity almost looks more valid because it's swept into our hourly fair value gap, whereas this is just a sweep over random high. Well, it's not. This key level in SMT is a higher probability manipulation using high time frame liquidity and your diverging market structure compared to a low time frame sweep. And in this case, yes, it was a fair value gap, but we didn't get the confirmations as well, right? Your high time frame is going to grant you narrative. Narrative needs to be aligned with the low time frame, or your high time frame narrative needs to be aligned with your low time frame and your internal structure. So when I see this sweep on the high time frame, this gives me a bearish bias. Even if we are sweeping out sell side, I'm aligning this time to show which sweep is going to be valid. Is it going to be our high time frame key level, or our high time frame sell side liquidity, or a high time frame buy side? It's not just I'm randomly taking inversion gaps off of every sweep I see or off of every break in structure I see. I am using high time frame liquidity. Okay, and that's the simplest way to trade high probability liquidity. So let's write this out. High probability liquidity. Oops, forgot an I there. High probability liquidity. What can this be defined as? Well, high time frame highs and lows plus SMT. I'm not going to go too in depth into SMT in this video. I have another video on that as well. But you pair your liquidity sweeps with an SMT as extra confirmation. Okay, high time frame highs and lows, high time frame session highs and lows, or high time frame, what was it? High time frame fair value gaps as well. This is your highest probability areas of liquidity, not just any high time frame or not just any high or low. It's a super unfortunate miscommunication that everybody on your TikTok, your Instagram, or other YouTubers, they make it seem as though liquidity is just every pivot high or low that gets swept out, when in reality it is not. You have to understand internal liquidity is honestly irrelevant if it doesn't align with the high time frame, right? So that is the biggest point of this video that's going to change your trading, is following the criteria of high time frame liquidity with an SMT paired to random internal highs and lows is going to change your trading. Now, of course, you want to pair this liquidity with your confirmations, and you can't just fire off every change in state and every inversion gap you see as a confirmation. You should also align this with an hourly open high low close. Remember, a liquidity sweep is a form of a manipulation, right? You want to catch manipulations along with other confluences, such as your hourly open. Okay? So when I talk about aligning time frames and not just using low time frame liquidity, how do I actually do that? I do that with an open high low close. Now remember, I have another video on this on my YouTube as well, so I don't go too in depth into that. You can check out the other video if you want more clarification. But in order to go from this hourly sweep of liquidity and filter this knowing that we're going to have a bearish bias rather than that this is our relevant sweep of liquidity, we need to implement our time frame alignment in our confirmations. So what do? Well, I simply acknowledge, yeah, sure, this is a valid area of liquidity as well. How am I going to differentiate which of these two areas of liquidity are most important? Okay, because most of these are on the high time frame as well. Sometimes what happens is you see on the low time frame sweeps, and it won't be an hourly high or low. That's insanely irrelevant if it doesn't follow a bias. In this case, it does. Okay, this is not just a random sweep. We sweep into a fair value gap and a high time frame low. So both of these key levels are relevant. Granted, this one doesn't have an SMT, so I already wouldn't trade it. This one does, so it's already more valid. But for the sake of conversation and showing your confirmations and how to get even higher probability, or how to identify which areas of liquidity are going to be the highest probability, let's talk about your confirmations, right? So implementing your open high low close is also going to show which form of liquidity is the most valid. Okay, your open high low close is showing you your low time frame manipulation that aligns with your high time frame bias. So in this case, this is where you're looking for your valid change in states instead of just firing off every change in state or inversion gap you see. You wait for your new high time frame candle to open, and you wait to see how we react to the time-based premiums and discounts from your high time frame bias, right? So in this case, since we've manipulated and we've swept out a high time frame high with an SMT, I want to see bearish price action. Right, I already have an arrow here. I'm anticipating bearish price action. What do I need to see for a confirmation? And again, we're intraday trading. I'm trading my executions on the 1 minute or the 5 minute. I'm not just firing off every trade I see from the hourly. I need my confirmations. The open high low close time frame alignment takes you to that entry. So what do we see here? The 7 a.m. candle opens, manipulates higher into a 5 minute PD array or a 5 minute fair value gap, meaning that we are in a time-based premium. Right? So this is a premium area for sells if we are following a bearish bias, right? Now that's still not enough. We can't just fire off this PD array, right? How do we know that we aren't going to invert this gap and that this is actually going to be our valid liquidity or our valid use of liquidity? That is when you look for your change in state, okay? You see here, these are the, oh sorry, I think I took this on the 5 minute. Yep. So these are the two up close candles that manipulated into your 5 minute fair value gap or your PD array. Your change in state of delivery is simply a body closure beneath your manipulation leg. And as you can see, that's exactly what happens. So what we've done is we've simply taken our high time frame area of liquidity and we've paired that with our open high low close. and our internal confirmations, so we've identified the highest probability areas of liquidity and aligned that with an internal manipulation to take a simple entry. And again, our change in state of delivery is the only confirmation you need to align our biases. Now let's talk about liquidity and how we use it to find profit or take profit levels in the market. Super simple. For me, there's a couple factors that go into this, and understanding which session liquidity is the target, which I talk about in my other videos. But high time frame highs and lows aren't really easy to understand where to place your targets. There's high time frame highs and lows everywhere. Session liquidity, again, it's a high probability area of liquidity that we can manipulate from, but it is insanely easy to use as a take profit. If we have manipulated and we've swept out, a lot of times what you'll see is we sweep out session liquidity and we have our other sessions liquidity that we've accumulated from that manipulation, that is the easiest place to take a take profit. It's insanely simple. People always overcomplicate. Where do I place my draw on liquidity? Where's the market going? Session liquidity, guys. Super simple. 90% of the time, I'm taking profit at session liquidities. Okay? So you can use liquidity to identify your manipulations and for your areas to take profit. Okay? So, again, I hope this video has been beneficial for you. This is me wrapping it up. You really don't need to overcomplicate your trading. Okay, by defining strict criteria for what liquidity is, your life is going to be a whole lot easier. Instead of firing off every single liquidity sweep on the 1 minute and getting burned trade after trade, by simply dialing down what you consider your liquidity to and following that as an objective rule, you are going to gain consistency in your model. Okay, that's all trading is. It's a consistency game. It's a numbers game. And those numbers and the statistics are built on objective rules. So the sooner you implement these rules into your trading, the sooner you're going to see results. Okay? Whole point of why I make these videos. You hear me preach it video after video, right? But yeah, I hope this video was helpful for you guys. That's going to wrap it up. And please, as always, leave a comment, leave feedback, and don't forget to subscribe, or you can even join the free Discord or even upgrade to the premium, because like I said, I'm running a sale for this weekend. But that's going to wrap up this video, and I will see you guys for the next one. Take care.